Introduction. Welcome to this detailed exploration of trading price action trends by L. Brooks, one of the most influential books on understanding price action trading. While many traders rely heavily on indicators, L. Brooks emphasizes that price itself tells the most reliable story of the market. His approach revolves around reading candlesticks, identifying trends, and interpreting the psychology of market participants directly from charts. This book is not a quick-fix manual, it's a guide to developing the skill of listening to the market through price. In this summary, we'll walk through the central lessons of the book, breaking them into clear sections that focus on price trends, reversals, pullbacks, breakout strategies, and trader mindset. Each concept is explained in a way that is practical and easy to connect with real trading. Whether you are a beginner trying to understand the basics of trend trading or an experienced trader seeking to refine your edge, the principles here will help you navigate markets with greater clarity and confidence. Section 1. Understanding price action. Price action is the language of the market, and according to L. Brooks, every candlestick is a sentence in an unfolding story. Traders often complicate things with too many indicators, but price itself reveals the balance between supply and demand. A series of higher highs and higher lows shows strength, while lower highs and lower lows reveal weakness. To read this language, you need to pay attention not just to individual candles, but to the context in which they appear. The market constantly alternates between trending and trading ranges, and the first step is recognizing which environment you are in. Brooks emphasizes that clarity comes from training your eyes to see the sequence, not just isolated patterns. Each bar represents traders' decisions, and your job is to align with that collective psychology. By focusing on what price alone is telling you, you strip away noise and gain sharper insight into market direction. Section 2. The nature of trends. A trend is the most profitable structure in the market. L. Brooks highlights that trends are born from imbalances between buyers and sellers, and once in motion, they tend to persist longer than most traders expect. A strong bull trend is characterized by consistent higher highs and minimal pullbacks, while a bear trend shows consistent lower lows with shallow rallies. However, trends are rarely smooth. They include pullbacks, pauses, and even failed reversals. Brooks stresses that traders often exit too early because they misinterpret normal pullbacks as trend failures. The key is to distinguish between healthy corrections and genuine reversals. When you understand the anatomy of a trend, you can ride it more confidently instead of being shaken out by short-term noise. Section 3. Reversals and their traps. Reversals are some of the most attractive setups for traders, but also some of the most deceptive. Brooks warns that most reversal signals fail, and that's why chasing every potential top or bottom is a costly mistake. A true reversal usually requires multiple confirming elements, a break of structure, momentum in the opposite direction, and follow-through. Traders often confuse pullbacks with reversals, leading to premature exits. L. Brooks explains that reversals are less frequent than trends, but when they occur, they can be powerful. The secret is patience. Wait for enough evidence that the crowd has shifted. Learning to avoid reversal traps is a key skill that separates disciplined traders from impulsive ones. Section 4. Breakouts and their reliability. Breakouts are moments of excitement in the market, but they're also moments of risk. L. Brooks explains that most breakouts fail, especially those that occur without strong build-up. The market needs pressure, like energy coiling in a spring, before a breakout can succeed. A true breakout is usually followed by strong follow-through bars and limited pullbacks. Traders should avoid jumping into every breakout. Instead, they should look for context. Is the breakout coming from a range? Is it supported by volume and momentum? Is it aligned with the higher time-frame trend? Brooks encourages traders to treat breakouts as part of the broader narrative, not isolated events. By filtering false moves from real ones, you can avoid unnecessary losses and capture meaningful opportunities. Section 5. Pullbacks, opportunities in disguise. Pullbacks are one of the most misunderstood price actions. Many beginners fear them, assuming they signal trend failure. But for skilled traders, pullbacks are opportunities to enter strong trends at favorable prices. L. Brooks highlights that shallow, orderly pullbacks often indicate strength, while deep, erratic ones may signal weakness. The art is in distinguishing between a normal retracement and the early stages of a reversal. A pullback in a healthy trend usually respects support or resistance zones and quickly resumes in the trend direction. Learning to trust pullbacks allows you to add positions or enter without chasing extended moves. In fact, some of the best trades come not at the start of a trend, but within its pullbacks. Section 6. Trading ranges, the market's resting phase. Every market spends a large amount of time in ranges. Al Brooks emphasizes that trading ranges are not wasted time, they are areas where the market is building energy for the next move. Within ranges, both buyers and sellers are active, creating overlapping bars, false breakouts, and whipsaws. For traders, ranges require a different mindset than trends. Instead of riding momentum, you focus on fading extremes and capturing smaller profits. The danger lies in treating ranges like trends. Many traders lose money by expecting big follow-through in a sideways environment. Brooks advises waiting for clear evidence before shifting from range trading to trend trading mode. Recognizing this shift is a cornerstone of price action mastery. Section 7. Trend lines and channels. Trend lines and channels are essential tools for visualizing market structure. Al Brooks uses them to frame price movement and understand the rhythm of trends. A trend line drawn across higher lows in a bull market or lower highs in a bear market gives traders a reference for momentum. Channels help traders anticipate where pullbacks may end or where price might stall. Yet Brooks warns against treating these tools mechanically. Markets often overshoot or undershoot trend lines, and traders must remain flexible. The goal is not to predict exact points, but to see the broader slope of supply and demand. By combining trend lines with price action signals, you gain more confidence in reading the market story. Section 8. Risk management and discipline. No matter how skilled you are at reading price, without risk management you won't last. Al Brooks stresses that trading is less about being right and more about managing risk when you're wrong. Proper position sizing, stop-loss placement, and capital preservation are central themes. Traders must accept that losses are a normal part of the game. The edge comes not from avoiding losses, but from ensuring your winners outweigh your losers. Discipline means sticking to your plan even when emotions tempt you to deviate. Brooks reminds us that the best setups can fail, but with risk under control, you survive to trade the next opportunity. Survival, in fact, is the real secret to long-term success. Section 9. Psychology of price action trading. Behind every candlestick are human emotions: fear, greed, hope, and regret. Al Brooks emphasizes that traders must understand not only their own psychology but also the collective psychology driving the market. Price action reveals how crowds behave, whether they're chasing, panicking, or hesitating. Successful trading demands emotional resilience. You must avoid overconfidence after wins and despair after losses. Brooks encourages traders to think in probabilities rather than certainties. Each trade is just one of many, and your goal is to stay objective. By mastering your mindset, you align yourself with the flow of the market instead of fighting it. Section 10. Building a price action strategy. Trading price action is not about memorizing patterns, but about building a framework for decision-making. Al Brooks suggests starting with the basics: identify the environment, recognize the trend, wait for pullbacks or breakouts, and manage your risk. Over time, you refine your strategy by observing how price behaves in different conditions. Brooks emphasizes patience and consistency. It takes thousands of chart hours to truly internalize price action, but the reward is independence from indicators and overcomplicated systems. When you can read price directly, you become self-reliant. Your strategy becomes a reflection of your understanding, discipline, and adaptability. Conclusion. Trading Price Action Trends by Al Brooks is not just a technical manual, it's a training guide for your eyes and mind. By learning to see the market through price, you develop a deeper connection with the rhythm of trading. From trends to ranges, pullbacks to breakouts, the lessons here give you tools to navigate uncertainty with clarity. Ultimately, Brooks teaches that trading mastery is about patience, discipline, and trust in the story that price tells. Indicators may fade, but price remains the purest signal of market truth. If you commit to this path, you'll gain not only technical skill, but also the mindset needed to thrive in markets long term.